Let's go to the Wi-Fi Interactive, where I am looking at the sector action over the month that just was. You can see this bright spot of green is energy. That's up 1.7%. That is on the back of crude oil, which has been rallying for 4 months straight. To the downside, it's pretty interesting here. On the bottom, we have tech, that's XLK, followed by XLI, that's industrials, utilities, and real estate. Those are down 6 to almost 9%, and 3 of those are very interest rate sensitive. So let me just skip to the bond market, then I'll head back to stocks for a second. This is the 10-year T-note yield on a year-to-date basis, and in May, 1, 2, 3, 4, 5, 5 months later, we have gone from 3.5% all the way to north of 4.5%, actually 4.57, and as we've been talking about, that is the highest price since 2007, so quite a big deal there. And when we have this surge in interest rates, a lot of time risk markets fall over, roll over, as they have, and it especially hits hard those tech stocks and those growth stocks, those long duration stocks, not the cyclicals as much, although they suffered as well. So here we see Apple down 9%. We just had a breakdown the other day, pretty significant technical event for that. Amazon just went through a really big losing streak. That's down 6%. Nvidia, the poster child of AI, is down almost 12%, and here it is on a year-to-date basis. But you can see it's just been consolidating near its highs. That high was made on its earnings date just a few weeks ago. And then looking to some of the other spaces in the market, here's our leaders. Cannabis, the cannabis ETF MJ is one of the few green spots, followed by oil. That's PSCE is for small oil companies, and then we have crypto that's slightly in the red, not really that bad, but you can see just about everything has fallen off, and those that are hit worse are kind of the fringier parts of the market that I like to say. Here's solar energy, gambling, looks like defense. Now, I'm not going to call that a fringy part of the market, but meme stocks are, disruption are, and then you have some other parts like home builders. We're seeing Korean stocks, chip makers, and let's just skip to the semiconductors. I already went over Nvidia. You can tell Intel here is a bright spot. That was up 3%. Global Foundries up 6%. When we take a look at software, pretty similar story here. CrowdStrike, I think that's an earnings story, up 12%, Zscaler up 5%, but for the most part, we're looking at some pretty bad returns here. Now, I will say there's a bright spot, because I've been showing this chart over the last few days. This is the S&P 500's performance by month, going all the way back to 1960. This line trending down at the bottom, that is September, so we just closed the door on that, and we open up October, and this is that cyan line right there, and you can see it's pretty volatile. We've had a lot of crashes in October. Will it happen again? We don't know, but I will say that volatility, another thing I've been hammering recently, volatility tends to spike in not only September, in October, and then we kind of get a respite into the end of the year. So the worst may not be over, but for the most part, at least the worst month statistically is in the bag here, guys.